Everything that's happening. Good morning, Trinidad and Tobago. A little off-air conversation, so you caught me off guard. I'm Hema Ramki and thanks so much for joining us here on the Early Morning Show. Yes, it's a beautiful Tuesday morning, and we're looking at the economy, world economy, Trinidad and Tobago's economy. S&P, for the first time in history, has downgraded the U.S. credit rating. It's no longer the golden star. AAA to now AA+. Will Moody's and Fitch be the next to go? And what are we expecting to see happen in our local economy? Yesterday, the Central Bank Governor, Yote Williams, released the monetary policy report. They're stating that TT cannot afford a general strike at this time, on set to answer some of the hard questions of the Trinidad and Tobago economy. None other than the Minister of Finance, Minister Winston Dukran. Minister Dukran, good morning. Thank you for joining us.
Good morning, Eva. Now,
how would you describe the state of Trinidad and Tobago's economy at this time?
Well, I think we're quite fortunate that the economy can be described as a stable one. And that has been the result of how we have handled the situation in terms of the challenges of the global economy, as well as in terms of our local demands for ensuring that our fiscal house has been put in order.
Ensuring that your fiscal house is put in order, and you would describe the economy as stable at this time. Yesterday, the central bank released its monetary policy report. Preliminary data suggests that a decline in real GDP of 1.7% during the first quarter of 2011, following 2 consecutive years of negative growth. We're just giving you a little snapshot of what took place. What are your thoughts on what was stated yesterday by the central bank governor?
Well, clearly, the first challenge that I had to undertake as Minister of Finance was to climb out of the negative growth scenario. And as the governor indicated in his report, there were 2 previous years of negative growth. And to some extent, that continued in the first quarter of 2011. But by the end of 2011, we have been able to climb out of the negative growth. And if I were to use his figures, we were going to at least a 1.2% growth. My estimate had been that we would have arrived at a 2% growth in 2011. So in that sense, we are well above expectations in terms of the climbing out of the negative growth scenario.
Let's stay in a clip from yesterday's press conference from the central bank governor, and we'll continue our discussion.
Whatever you have to do, we can't afford a general strike. In the current situation, with the fragility of the economy, with all indicators showing a decline in real GDP in the first quarter, with the nervousness that certainly will pervade international capital markets now, we can't afford it. It's time that we take steps to return our public finances to a much more sustainable level in order to avoid our public debt situation from getting out of hand. We have 35%.
Minister Dukran, that was a clip from yesterday's press conference. Your thoughts on what was stated by the central bank governor?
Well, I think in general, he's correct in what he has stated. I would not, however, suggest that we are in a grim situation in Trinidad and Tobago. I think we have, as I said earlier, climbed out of the negative growth scenario. And we did not achieve as much growth as we would have liked, and even at that, I'm still hopeful. But we were able not only to do that, we were able to ensure that the current problems that we are facing have been contained in terms of the fiscal house that we have had to put in order. So in that sense, while we are stable and we remain a fragile economy because of our smallness in terms of world economies, and we, however, are not in a grim situation.
Now, the central bank governor stressed on the point that TT cannot afford a general strike at this time. I know that we have a clip from the labor union and the labor movement as to what they intend to do. The governor is saying the general strike is the worst possible thing TT can face at this time. He explained that the general strike in face of global uncertainty following the downgrade of the U.S. credit rating, coupled with the fragile state of business confidence in TT, could affect consumer demand and put a halt to any resurgence of economic activity. We're going to take in a clip from the unions and then we'll get your response to what the governor is advising and what the unions are saying.
A sea of color and sound as members of 18 trade unions gathered as early as 1 p.m. at King George V Park in Sinclair. Earlier in the day, the area was cordoned off at the Prime Minister's Sinclair office and security was beefed up. But as the meeting carded for 2:30, the 18 leaders, led by the OWTO President Ansel Roger, went to meet with the Prime Minister in a meeting just about 3 hours. And while inside, the massive crowd outside chanting and beating drums. But when the OWTO President General Ansel Roger finally came out, no good news for workers who showed their frustration. He noted the Prime Minister wanted the unions to start from scratch, meaning that unions will start over negotiations at 0%. The OWTO President insisted that this was a trick, and when they opposed this, he claimed that the Prime Minister told them to shut down the country.
After we exposed the attempt there to set us up. After we exposed that, seemingly out of a fit of frustration, she said, well, shut down the country. She said, what do you say, Prime Minister? And she did return to that instruction. And we are honest, law-abiding citizens. We are diligent workers. We are productive workers. And if the Prime Minister gives us a task, whether in whatever shape or form, we are daring to carry out that task.
The unions are still mummed on the plan of action regarding the general strike, but note it will come unannounced. He says anything that occurs beyond Tuesday, the Prime Minister would have been aware of the consequences.
She is fully aware now. She is fully aware of the implications. But it seems that miscalculation has gotten the better of her. We still leave it open to the government to let good sense prevail in this season of struggle. While workers are upset, workers are damn vexed about what is happening, we still leave it up to the government to let good sense prevail and reverse that unfair decision of a 5% wage gap.
At this time, the labor movement has announced that the negotiation has been stalled. For CNC3, I am Otto Carrington.
Minister Dukran, the union is appealing for good sense. The central bank governor is appealing for good sense. The union, as are saying, and this is according to the Express newspaper, that they do not want to shut the country down, but they are being driven to do so by the circumstances that the government has created. The unions are insisting they're not stepping down.
Well, I noted from the comments that were made by Mr. Roger that he understood the implications of what has been proposed. But he felt, notwithstanding those implications, there must be a strong response from the labor sector for better working conditions. I agree the need for the labor union to express its views openly and freely, as they have done. But he also said that it was a miscalculation that has been creating this sense of furor on their part. And he's quite right. The miscalculation is not what he perceives so. The miscalculation is that when we negotiated the wage arrangement, it was in the context of a compensation package. And the compensation package will have not only a salary component, but indeed will have an allowances component. And as I mentioned previously, in some cases, the allowances, if we allow them to increase as they have been proposed to, and we generally in agreement with that, will increase basic salaries from between 10 to 20%. And therefore, his miscalculation is that he is focusing on salaries when in fact he should be focusing on the compensation package that is now affordable in Trinidad and Tobago.
Now, there have been ads running on all of the major news outlets in Trinidad and Tobago calling for good sense to prevail, saying that we cannot afford at this time to pay more than 5%. Is the government willing to move from that 5% position, and can we really afford it at this time? Let's look at the numbers and look at the figures.
Well, as I indicated to you, that we must indeed operate at an affordable level of expenditure for compensation. And that will require us to look at the total picture, which in the public sector, we now have a wage bill of the order of about $8 billion per year. With the proposed salary arrangements that are on the table, it's likely to at least increase by about $2.2 billion per year. And in that sense, affordability argument will suggest that it will be imprudent at this stage to increase the wage bill beyond the 20% of the revenue base of the country or thereabouts. On the question of whether or not we would change the formula, it is all guidelines had been set. There's no question about that. Guidelines have been set by myself in terms of establishing what the country's affordable position can be. And then free negotiation will have to take place, as it has taken place. And many of the unions have, in fact, accepted the arguments and have agreed that this is a time to provide a breathing space for the economy. May I hasten to add that what we're talking about is a wage agreement from 2008 to 2010. It is an inheritance. It is really unfortunate that the bargaining system allows such accumulation of inheritance. So what we're not talking about is current wages for the future 3 years, but for 2008, 2010.
Now, earlier this week, last week that is, we spoke to Patrick Watson, economist and former senator. Let's find out what Mr. Watson had to say about the possible implications of a general strike or a national strike and what it would mean to the economy at this time. The central bank governor continues to say that we cannot afford the strike at this time.
Things are looking up for the local economy, but it still remains fragile. That's according to economist and former government senator Patrick Watson, who believes a national strike could undermine the gains made in stabilizing the country's financial position. Speaking on the CNC3 Early Morning show, Dr. Watson said the effect could be crippling.
If a national strike is indeed called and is successful in the sense of from the point of view of labor, then it cannot be that it will have a crippling effect. That is the fact. I am hoping, of course, that that does not happen at all, and that the return to the bargaining table in the way that it is supposed to be done.
He admits that government has in fact taken a firm position on offering 5%, but it does not translate into a wage cap. Dr. Watson urged the labor movement to reflect on the economic challenges currently facing the US and many European countries. While he does not believe the labor unions will pull off a national strike, he says any action would shake investor confidence.
There is nothing positive that could come out of a strike like that, nothing positive to the economy and anyway. It will put us into a tailspin. It will hit confidence a lot. That's what it's going to do. It's going to impact a lot on business confidence. It's going to do a lot of things to turn back the general mood of optimism that is beginning to come into being. So it's not going to be a good thing.
The budget deficit currently stands close to $8 billion, and he believes it could shift closer to $9 billion by the end of the financial year. According to him, removing the gas subsidy would slash government's deficit by half.
That gas subsidy should be generally reduced and eventually eliminated, as has happened in other countries richer in oil than us, like Iran. But I suggest very strongly that that be always given serious consideration. And indeed, to the extent that I don't want it to be forced upon us by other measures. It's good to have it. It's good to be dependent on it. There's also a few things that are bad about the gas subsidy. It encourages an abuse of gasoline because it's relatively cheap.
Dr. Watson is urging the labor movement to return to the bargaining table and let good sense prevail.
Well, Trinidad and Tobago, we are now going to take a very short break. When we come back, we're going to get the minister's response to what is stated in that clip, and we will also find out about what's happening with the U.S. economy. Stay with us. Welcome back to Trinidad and Tobago. Global economic uncertainty. Can we survive in an environment? The international stock markets are reacting violently on Friday night. The world stood in shock. Everyone took a big gasp. Standard & Poor's has downgraded the U.S. credit rating. It is no longer the golden star, no longer AAA, it's AA+. What does this mean for the local system? Minister Dukran, the debt crisis in the U.S., $14 trillion. The Obama administration thought they received a lifeline when they were able to pass that bill to get the permission to borrow an additional, to go beyond the debt ceiling for an additional $2 trillion. But without even making one breath, one sigh of relief, the S&P hit them one slap. Nope, time to get your house in order. You have to fix this. Many are wondering, what are the implications for the local system as it relates to what is happening on the international market?
Well, I think you're well aware that the downgrade syndrome is now part of the global behavior of the global economy. Because not only in the United States, but within recent times, we have had enormous problems in Europe and even in Japan. I think it's fortunate that Trinidad and Tobago has been able to preserve and indeed find a change from a negative outlook to a stable outlook by the very same Standards & Poor's, which was reinforced by Moody's in Trinidad and Tobago. And if ever there is an indication, to the extent that we can use the rating agencies for such an indication, we have been saved from some of the major repercussions and external risk associated with the global scenario. But having said that, there is no need for complacency at this point in time, and that we must be aware that what is happening in the United States and Europe has an underlying problem. And the underlying problem is the fear that we will move into recession, perhaps, or at least slowing of growth. And that will affect not only Trinidad and Tobago and the Caribbean. It will also affect us via the commodity markets, and in our case, particularly the price of gas and the price of oil. Already the gas price of oil has dropped to somewhere in the range of $80, I believe, and maybe fallen. And the price of gas itself has dropped to a level of about $3, both of which will have significant implications for revenue intake for the future and certainly for the present. In addition to that, you will find that the cost of borrowing, both in terms of the private sector and the public sector, is likely to increase now in light of the U.S. downgrade, or more importantly, the fears that have been developed with respect to the capacity of the U.S. to have a long-term solution to the debt and deficit problem. I think that's where the problem really lies, in the sense that the confidence in the long-term solution, as agreed to by the Congress, has not been restored. So therefore, we are likely to face a rising interest rate scenario. And even when the public sector goes to borrow, we will have to face up to that. But we are somewhat comforted that our ratings have been sustained and in fact improved, and therefore put us in a position that we can benefit from the work we have done over the last year.
Now, the central bank governor and many economic experts have always stated that business confidence in Trinidad and Tobago has been very fragile. There seems to be some improvement and some expansion in credit. With this level of uncertainty on the international market, how do you expect the confidence that consumers have expressed in the last couple of months to be affected? Do you think that we will now see the borrowing capacity be reduced once again?
Well, I think one of the important components of confidence is the fact that the fiscal house has been put in order in Trinidad and Tobago. And in that sense, that is an important contributor to confidence that has emerged within recent times. The fact that there will be some nervousness with respect to the world economy will affect some of the feelings of some optimistic feelings for the future. But I don't frankly think that it will fundamentally affect the path of growth in Trinidad and Tobago, because the new investments that are likely to come over the next few years will not be daunted to the same extent by the world recession fears. But I must be complacent, and I must ensure that the fiscal house remains in order so that we can encourage the confidence building process.
Now, the central bank has stated that the stock prices have performed well, but trading remained relatively low. as opposed to the same period in 2010. In light of all that is happening on the international stock exchange, do you see this as continuing?
Well, the issue of the stock exchange is really whether it's one of perception or really a change in the reality of the economic situation. We have had some positive movements in the stock exchange within recent times, but there is need to expand the stock exchange to ensure that there is a deeper stock exchange in Trinidad and Tobago. And you recollect that in the last budget, I spoke about steps that we will undertake in order to do that. So we are in a continuous process of building the confidence levels, even in the stock exchange, as indeed we are in terms of the fiscal house.
Now, yesterday we spoke with economist Ronald Ramkissoon, and we're going to share with our viewers a clip from Dr. Ramkissoon, his perceptions on what is happening as it relates to the local economy and what is happening with the U.S. economy. So we're going to look at that clip, and then we will continue our discussion with the Minister of Finance.
But, Hema, we sell oil, natural gas, some petrochemicals to the world. If the world economy, especially our major trading partners, which in fact are the UK, Europe, and the United States, if they are weak and their demand for products should fall, and that is likely, that has always happened in a recession in the developed world, then we will sell less, the price that we will get will be less, and therefore the revenues that the government would get will be less. Not to mention what is the same kind of effect on the Caribbean. And the Caribbean and the world is already weak. If that is the case, then we must cut back on our expenditures. If we do not cut back, then we have to borrow. If we borrow, then we are likely to be borrowing at higher rates, which is going to mean that we have to find more money to service this debt, and then we are following along the lines of the countries that we are seeing that are in almost chaos all over the world. So why will we want to pursue that?
That was a clip from Dr. Ronald Ramkissoon. The U.S. is being told that they must cut back on expenditure. Minister, the other major economies in the world are also being told that they must cut back. They're trying to put their house in order, the debt situation. And we're not just looking at the U.S. situation, it's globally. Now, if one of the major trading partners is now cutting back on expenditure, what does it mean for us and our exports? What does it mean for our economy?
Well, obviously it will have a negative impact on our economy and our economic future. But I maintain that we have been able to establish a level of expenditure that we can now finance at this time in Trinidad and Tobago. And that has been reflected by the fact that our rating has remained intact. But we will have challenges. And if indeed the price of gas and oil were to deteriorate substantially during the course of the next fiscal year, it will have an impact on our expenditure levels. We are now doing the arithmetic on that matter, and we are watching very carefully what is likely to be the scenarios ahead of us in terms of that revenue source.
Now we're coming out of a 3-year fiscal deficit period. $8 billion is being quoted. What is happening in the U.S.? What mechanisms are we putting in place to ensure that we do not go down the same path?
Well, clearly, we have to agree that we cannot sustain fiscal deficits for any prolonged period of time. And our attempt is to try and restrain it during the course of 2011. And during the course of 2011, perhaps restrain it even further. But we, at the same time, cannot restrain deficit financing at the expense of the growth potential of the economy. And therefore, there is a thin line between austerity measures to sustain expenditure on one hand, restrain expenditure on one hand, and on the other hand, to create the necessary triggers for development and growth to take place. It's always a balancing act. There is no such thing like a free lunch in these matters, and therefore one has to take a judicious approach to both the growth and the austerity measures.
Now, it's interesting that you say it's a balancing act. The central bank governor did state that the government should carefully prioritize its spending to ensure that everything is kept in check. How will you be prioritizing your spending? What would you decide to cut back? It's no secret that governments win votes by putting money into social systems and putting money into social programs that may not necessarily reap economic benefits, but that is what gives you the votes at the end of the day. Is the government of Trinidad and Tobago, the People's Partnership government, willing to make the tough decisions to say, I'm going to cut back on this because there's absolutely no benefit to the economy?
Well, I'm not too sure I'll agree with you that the purpose of social spending is primarily to win votes. I think the purpose of social spending is to provide social stability in the country and therefore has a direct economic benefit. And therefore we must maintain, as far as is possible, that social spending support. I believe the figures are in the order of about 18% of our expenditure is in that direction. And it is meant for social stability. It's also meant to tackle the fundamental issues of poverty and income distribution in the country. So I think it's somewhat simplistic to suggest that it is based on votes. Obviously, there will be benefits that will come to any country and hopefully to a government by virtue of its very substantial role in dealing with poverty, social stability, and so forth.
How will you prioritize your spending for the next fiscal period?
Well, how would you prioritize it will depend on the balancing act that I spoke about. You need to maintain your social expenditure as far as is possible. You need to make it more efficient in terms of delivery. But you also need at the same time to put aside enough funds to generate the infrastructure requirements for building a competitive and growing economy. And you'd obviously have to sit around with your envelopes and decide which one will take what priority. Now, we are always in a situation of ensuring that we have a stable economy, a stable financial system, and at the same time, we have the potential for growth. That has been the challenge.
Now, Minister Dukran, I have to ask you about the controversial topic of the gas subsidy. In light of all that is happening, we know the volatility on the international market. I think figures are quoted about $4 billion thus far as it relates to the gas subsidy. Would the government be rethinking its position on the subsidy? Are we now faced in a position that we will have no other option?
Well, this is part of the social support as well as part of the economic support for the country. It is an accumulative figure that you have referred to there over since 2004 or thereabouts. So what we are doing at the moment